Thank you everyone for joining us today in this corporate briefing session of Systems Limited. So on behalf of Systems Management and on behalf of Topline Securities, I welcome you all in this investor briefing session of Systems Limited. So first of all, to begin with, there are some housekeeping rules. So the mode of communication would be in the English language to accommodate foreign investors. For the first 10 to 15 minutes, there will be a presentation from Ms. Ruhi Khan, CFO of Systems Limited, and then Q&A session will be opened. So for Q&A, you guys can put your question into the Q&A box, and then host will spell out the questions, read the questions, and then senior management, including Mr. Asif Peer, will answer these questions. So over to you, Ruhi. You can continue. Thank you.
Hi, good morning, good afternoon, everyone. Welcome to the Systems first half year investor briefing session. So I'll just quickly take you through the presentation and then we'll open the floor for Q&A. And as Chandra has mentioned, if you have any questions during the session as well, you can type them in the Q&A section. So starting with the introductory slide for people who are new to Systems. Systems is a leading IT company and a global digital transformation service provider. We were incorporated in 1977 in Pakistan, started from there and then expanded our operations throughout the world. In this slide, you can see our customer locations. We are present in North America, in Europe. We started spreading in Asia Pac and in Middle East outside of UAE in last couple of years ago. And you can see that in our segment note that the MEA business is continuously growing. There is a lot of opportunity in the APAC market as well. Our specialization is digital, data and AI and cloud. And our industry group, and we are focusing on BFSI, telco, retail, pharma. Government is a big customer for us in different regions in Pakistan and India as well. So we have a separate slide for the revenue contribution from each of these verticals. So if I go to the key stats, again, I have detailed financials later in the presentation, but this is just to show you an overview of performance of the company. In first half of the year, we closed the revenue at 31 billion, and the EBITDA is around 4.7 billion. The share price, this chart shows the performance of shares against the market index. And we also wanted to highlight some of the awards and recognitions that Systems has received in this year. So Systems has been recognized as the best under a billion by Forbes Asia, 4th time in a row. Systems has recently again won a Microsoft Inner Circle Award and had been recognized Partner of the Year. For Systems MEA has been recognized Partner of the Year by Microsoft. 3rd time in a row, we also received MEA Delivery Partner of the Year award by Temenos. PSX has been continuously recognizing Systems in the top 3 performing companies. So these are Banking Tech Award is also the new one that we got. Microsoft, IBM, SAP, Temenos, Salesforce, AWS, these are our leading technology partners, which are closely working. We are closely working with them, expanding business with them.
And also this year we have also received the Inner Circle from Microsoft, which means we are again 4 years in a row we are top 100 partner, one of top 100 partners globally at a global level. So that is a huge accomplishment, and this will definitely open up a lot of opportunities.
So I see a hand raised, but Mr. Naseem, if you have any questions, please type in the chat. Yeah, so this on this slide, we just wanted to highlight our value propositions. So systems want to unlock new growth horizons through innovation, digital data, AI, cloud. We have a global presence, and as you can see that we are operating in 16 plus countries with our customers located in those countries. We have directly owned subsidiaries in some of the countries, and we are working with the associated companies through the associated companies and the rest, but we have a global presence. Employee ownership is a very key retention tool for Systems Limited, and one of the few companies, listed companies, that is offering stock options to our employees. And because of these stock options, more than 50% of the company is owned by current and ex-employees of the company. There are some other propositions on this, but I wanted to highlight the recurring revenue thing, that 85 to 90% of our business revenue comes from our existing customers or new business from the existing customers. There's a recurring revenue stream. And even in dollar terms, company is continuously growing, and we have a growth CAGR in USD terms over 30%. So here we wanted to share the headcount dispersion. So you can see that back in 2019, Pakistan, we had majority of our presence was in Pakistan. So 95% of our employee base was in Pakistan, and about 5% was in UAE. Then over the years, we started expanding, and now currently in 2024, we have about 85% of resources in Pakistan, but we opened up another development center in Egypt. And currently we have around 200 employees in Egypt as well. The second biggest employee base is in UAE, because we have a lot of customers in UAE where our employees are working on site for the customers. So, and in relation to the revenue by geography, you can see that majority of the work is being done offshore in Pakistan. This is our customer split and the vertical split. So after Temenos, BFS became the biggest vertical for us. So 30% of our revenue is coming from BFS. The second biggest vertical is telco. We have telco customers in MEA region, in APAC, and in Pakistan. Technology is the next big vertical for us. Then this one is then retail. And this is the customer split. So the customer split is count is based on revenue over 100,000. Wanted to touch upon AI, and Asif can add to, can join in. AI is the buzzword and an emerging technology in the world. So systems is also doing industry assessment, working on AI-driven solutions and accelerators, and preparing use cases for our customers.
Yeah, I think that's a huge potential these days. It's not like just everyone wants to do AI, but everyone is not ready for an AI as well. So it's a huge opportunity for the companies to do an assessment. Are you AI ready first? And it requires a lot of data engineering and infrastructure work as well to realize the AI value realization model, right? That's a key. That what would be the ROI. So we have been working very closely with our customers in identifying those key assessments, bringing them up to speed, that how they can leverage AI, and also the business use cases with the value realization model and ROI-driven approach versus just having the AI for the sake of AI. So that these business use cases and the problem-solving approach is giving us a huge advantage. I think we all must be hearing that, okay, AI will replace this and this and this. Like I can give you an example, like if AI wants to replace the call center agent, the cost is like 20 cents per minute, right? So for AI. to run all of these models on hardware and accelerators and so on and so forth. So you can translate still the offshore cost is much, much cheaper, right? So people need to see the ROI again. There's definitely a lot of room for improvement for automation, reduction of the calls, and so on and so forth. And also a lot of opportunities are unlocking in the global shared services as well. That how can you have transformation and automation done and still use the low-cost labor arbitrage as well, along with AI. So it's a new venture and new avenue. Of course, it's not, I would not say like it just emerged. I think last 2 years it has been aggressively progressing, and it's definitely going to disrupt a lot of things. And we are also now the companies are asking about the automation and so on and so forth, and it's going to increase more and more. It's not going to replace the workforces. It's going to add more flavor and different kind of work and different kind of a productivity level that everybody wants to see. And I think it's an immense opportunity to unlock globally, and because everybody's talking about it, and it's not just the talk, it's the real R&D and real work is going into play, and it's a big opportunity globally for us to unleash, and we are working very aggressively on that because that's alone will determine the future of a lot of service providers.
So covered some of it, so I'll just move on. Again, this one shares where the focus is. Three basic verticals: BFS, telco, and all other verticals we classify as growth vertical, geographical expansion, and the service offering, which includes AI, as Asif has mentioned. I'll move to the financial performance of the company. So this comparison is the half-year performance. As you can see, that company is doing a 62% CAGR in revenue, 45% operating profit, and the net profit margin. Net profit is also at 32% CAGR. So we have put this slide to show the performance of systems against the benchmark companies. These are some of the leading companies in different regions. And you can see that our growth and profit margin. So the service really, usually the golden rule of 40 per service company, growth plus EBITDA margin is 40. So systems it's consistently overperforming against the benchmark, which is currently also in this first 6 months, we have a 31% of revenue growth and more than 10% of profit margin. So as compared to the benchmark companies, you can see that the companies that are aggressively growing have and aggressively investing in their territory, so their margins are a little compromised, if you can see.
Basically, it's of course to maintain the 30% growth rates, we have aggressively invested in the markets and double down on especially the GCC, the new markets, and also we can explain you later in the Q&A that from the cost perspective, of course, this is all cost has also increased, but I think what we are seeing now with the base growth that we have achieved 30% growth year on year, we have a strong base of customers, and now we're going deep into those, and that is definitely improving our margins on ongoing basis, which we have highlighted that as well.
Yes, and our SG&A is percentage as compared to our revenue is being rationalized and optimized as well as we are growing. So this is also comparable, actually one of the lowest as compared to the peer companies. So here you can see the client composition. We have this slide shows clearly that our top 20 customers contribute about 48% of our revenue, and our customer portfolio is diversified. We don't depend The top customer is 15%, but top 10 customers contribute around 34%, and 50% is well diversified and distributed among 20 clients, which are in different geographies. Coming to the quarter-on-quarter performance, this chart is showing our performance this first half year as compared to the first half of 2023. The revenue marks 31% of growth, and EBITDA marks 7% of growth. Even in also in dollar terms, our the average rate for first half last year was around 273. The average rate for first half this year is 278. So even in dollar terms, you can see that the numbers are growing, the business is growing. This is performance of this quarter versus Q2 2023. So revenue again has grown by 30%, and profit has grown by 8%. But for this, the average rate, so Q2 last year, we had seen a strong, significant appreciation, and that's why the average rate, you can see that last year in Q2 we had 285.76, while this year it's 278.03. So that takes up for the FX leverage that we get, despite of the cost increases, we are still we were able to show an 8% increase in our EBITDA margins. So currency mix, we have about 93% of our revenue is done in foreign currency, and 7% is in PKR. So most of the contracts in Pakistan have also been negotiated in PKR, in dollars. And however, because of the geographical expansion, the foreign currency cost component is around 40% now, and PKR component is 60%. So I will just move to the Q&A now.
Right. Thank you, Rohi and Asif Safar, for this presentation. So I'll once again repeat, if you guys have any question, then you can put your question into the Q&A box, and then I'll read the questions for the management. So Asif Saf, taking the opportunity, so I'll ask a very broader question with respect to the overall IT industry of Pakistan, and when I also compare it with your numbers. So basically, first of all, how do you see the overall IT exports from the Pakistan for the next year? And then from the slide that you have just mentioned about the gross margin comparison of yours versus your peers across the world, so there's a bigger difference. I mean, your gross margins are in the range of 20 to 22%, and peers are in the range of 30 to 40%. So how would you comment that, considering I'm assuming we have the cheaper workforce in Pakistan, we have fairly competitive currency as well. So over to you, Asif sir.
Yeah, I think first of all, of course, export is on the growth trajectory for Pakistan as well, and I think overall the demand is there as well, and especially in the region where we are operating. So industry is expecting in the range of 20 to 30% growth overall, maybe plus minus a little bit here and there, but that's a general. I think usually 20% is safe to assume to start with. So that's what industry is expecting, and that's what I would see as well. The second question that what you asked is from a gross margin perspective. If you look at that, what Ruish, there is a, of course, where there are certain costs that we accounting in our and below the cost in the cost of revenue versus others accounting SG&A. That's why huge difference. We park account managers and others into the above in the cost of revenue, the research, and the cost of, we are not capitalizing any research and any capacity building that we are doing. We're building any solutions product. We are all expensing out all of these activities right now. So there is definitely, if you combine these two, that's why you see a huge difference, which Rui was highlighting. SG&A is lower versus other peers as well. So it's a classification thing mostly, I would say. So generally, if you look at the OP and NP level, they are in the range. The high growth companies, if you look at Globant as an example, they also grew by 30+%, like we grew as well, and their NP margins are 7 to 8% as well, right? So because when you're growing aggressively, then you are investing in all these resources, right? And opening the markets and doing acquisitions and so on and so forth. So all of these things take definitely directly go from the cost, and you're building the new practices, new solutions, new horizontal and vertical, new industries, because you are continuously in the growth momentum. So in services industry, that's what we follow generally, like the rule of 40, right? If you Google even, you will know that like 30%, like your growth and EBITDA margin needs to be over 40%. And that's what we are always maintaining that from that perspective. So, and with the dollar, of course, there are certain, of course, cost increase and the dollar appreciation, which Rui shared as well, which and inflation, Pakistan macroeconomics are a little bit off this year. That when inflations are high, interest rates are high, that usually the dollar not appreciate but depreciate a little bit, if not much, right? But this year, I think it's a very unusual scenario that happened. Even we are below the real exchange rate, right? Which is so we definitely have double-edged sword, like when the currency is appreciating, the inflation and interest rates are high, and our cost is still, like you can see, the 60 plus or around 60% cost is still in PKR, and dollar revenue is increased. Like we have done our shift in the business model, and 90+% is now dollar based. So it hit us definitely from that perspective. But going forward, as I said earlier as well, and we have written down clearly in our director report as well, because these this is seasonality in this quarter as well. And we are seeing a good improvement because now we are not opening up new markets. We are consolidating what we have this year at least, and we're focusing on double down on where we are and getting deep into the customer. So it's not, our customer acquisition cost will not be higher, and the volume is there. And we were able to, I think, if we are able to achieve the good margins at this dollar rate, which is we are very aggressively trying in the second half, which we have written down as well. I think then of course eventually the currency will take its action. We are not relying on that. We're just fixing whatever we can through optimization, efficiency, creating more, getting more deep into the customer. So multiple things are going on. So it will definitely improve at this level. Even if I'm just take dollar out of the equation, we are very confident at this level we will also improve. And when the currency help us, of course, we will have a different course of action automatically as well.
All right. So when you are using the term doubling down on the areas where you feel there's a promising outlook, so can you just name few regions or the markets where you are focusing
I
on,
think
on the particular
I
products
think
here?
KSA is like one of the best markets we have seen, like the robust growth in the last 2 years, which was even double than what we forecasted. So we definitely see a lot of potential and a lot of opportunities in every area which Rui highlighted to you in the presentation. They are working on all these areas, right? So it's a huge opportunity and it's untapped for us because we just started. Definitely, UAE is also not saturated. We still have a lot of opportunities. We have signed up a lot of our customers, and the framework agreements has been signed, which needs to be materialized. Also, we have signed some few of the contracts in the region as well, in the Africa region as well. So there is definitely a lot of untapped opportunities. Saudi being number one, UAE being number two, and then there is an APAC. And then, of course, there are other regions. And of course, US business, as you can see from our segment this half year, it has improved as well. Similarly, Europe business has shown a significant growth as well as compared to the previous year. So these two geographies are also contributing majorly, and in addition to what we have. Only thing, of course, other thing that you ask about the margin, I would like to highlight, I think domestic business is definitely a drag on the margin. I think segment analysis clearly shows that as well. We have a lot of contracts which are finishing up. We have signed 5 years type of a contract in PKR terms in the past, which was definitely a I would say at that time it was in hindsight mistake, but of course it helped us a lot in the growth by creating the capability and capacity and the reference. But financially, definitely was a loss. But we are these things are finishing up, and we are very, very, very hopeful that it's a major turnaround in the Q4 and onwards for the domestic business as well.
And one follow-up questions on the margin side. So will the margins will remain at existing 22 to 23% unless there is any currency depreciation? And what has happened on the cost side despite rising Q over Q revenues and but the margins have actually come down. So at what level we can expect margins to go back to 25 to 30%?
30% is a far stretch, to be honest, like because with this kind of a growth and the investment that we are making in resources, but definitely we are aiming for 25 plus. That's our aim to improve. And there is a quite, I think, as I said, like we're not relying on dollar will be just on top. So we currently want to maintain at this even dollar rate, we want to maintain and increase the margins. And we are quite hopeful that we will be able to achieve that in the near future.
You have also briefly touched upon the Pakistan business, but again, the Pakistan market is generating loss for the systems right now. So it makes a logical sense to cut down business in this country.
We
So
have
what's your
not,
plan with this business here?
we have already, as I said, like we have already uh, like cut down all the tail. Uh, I would say we've started the process. It will be cleaned up in next 3 to 6 months because there are pending contracts which we need to honor. The contracts are finishing in Q3, Q4, and Q1 of next year. I would say, there is almost all of the previous commitments will be over by then. But definitely every quarter there will be a improvement for sure. So Pakistan business, we are not growing aggressively. We are only focused on the key accounts, key competencies, and key projects. So that is very clear to all of us what we need to do, what tech actions we need to take. And when we are renegotiating those contracts, which are longer term, we signed 5 years ago or so, we definitely, our rates are much, much, much better than what we signed up because the dollar has changed almost 80, 90% since then. So if you just take the dollar increase at that time from this time, it will be a huge profitability impact. And we are very confident this is going to happen. Most of the contracts are renegotiated based on them. As contracts are finishing, we are increasing the significant rates on all of the customers. So I'm very confident that Pakistan business will have a turnaround story. It won't be a drag on the profit. It will be definitely not the similar profits. I want to be very realistic. Like we can't make the similar profits in US, Europe, and Pakistan business or Middle East, but it will be definitely much better than what we have. Definitely.
Perfect. So you have also provided your view on Saudi market and UAE market, but what distinguishes system from other IT service providers in terms of the expertise that you guys have? And can you share your overall projections for next 2 to 3 years regarding revenues or maybe a percentage terms revenue growth for next couple of years?
So Saudi and UAE and especially the regional market, if you're asking the question about the regional market, we have a huge advantage because one thing is for sure, this market needs focus and the customer centricity, which they are not getting so far with the other SIs. We are very, very focused on the customer centricity and the delivery and solving the customer problem, putting our best foot on the ground, best people through from top down, from myself to everybody, is really focused on clients and delivering them a stellar service and a presence and a commitment, right? So that's what this market needs because a lot of big companies are focused on just America and Europe, and they don't have the good A players in these markets. So that gives us a huge opportunity, huge greenfield opportunity to expand because we bring our best people and we try to compete and win the business. And of course, its price comes at the end, but price also adds a factor for first quality, and then quality only customer centricity only come if you would deliver the quality product. And once you deliver the quality product, at a price point which nobody can beat, I think there is a huge value prop for anyone, right? So in these type of inflationary environment, I think whoever does this efficiently and effectively will win the race. And through AI, of course, everybody wants to talk about it. So we are all trying to run after this great opportunity to get more deep into it.
Perfect. So with regards to the recent internet disruption in the country, so has your business faced any kind of disruption, or maybe you can also answer this from the Pakistan's point of view?
No, I think number one, first, let me address from our perspective, and then I'll address from Pakistan perspective. We did not face any disruption because we have multiple redundant internet IPLCs and redundant circuits and other stuff, redundant providers that we have taken. So even there was a slowness for 1 day or 2 days, we didn't face much of a challenge, and we were able to deliver all of our works. No client complained, nothing, for all across the globe. So from Pakistan perspective, again, the problem was there for a day or two, and then a little bit of here and there. But overall, it didn't stop like delivering the business, right? So I didn't hear from any of our associated company, Pasha associated company, that someone has not been able to deliver. They might be able to here and there a little bit of disruption, but it's not significant at all. So I think, and this problem has been largely accepted and resolved as well. So I don't see this as going to impact a lot from IT perspective. But still, we have to build the DR and BCP plans, which we have. And we have taken multiple 2, 3 backups. So making sure there is no disruption, because the quality of service is the most important criteria and customer centricity. And we never compromise. We will never compromise as well.
Okay, perfect. So there's one more question. So we are seeing your peer FPT talking much about building GPU centers, AI fabrics to offer GPUs. And is something you are also considering? And what do you estimate your market share in GCC to be? And how is the competitive landscape developing over there?
The GPU, you can develop these data centers and GPU and AI stuff if your country has a lot of usage as well. I think unfortunately we in Pakistan don't have that much of a usage of these GPUs, and people have not still uncovered the basic data engineering. So the AI will take its own sweet time here in the local. So I think in Vietnam and Japan, they are building FPT, since you gave an example of FPT, because they're far ahead on the data and AI side as compared to Pakistan. So they are going to use it for their local markets, not for US and Europe. So that's their first goal is. So we don't have those kind of an opportunity right now exist in Pakistan, because there is not much demand right now. So that was your first question. And from GCC perspective of market share, from a systems perspective, you're asking, I think it will be always significant. It's more than 50%, 52, I would say, combined, because Saudi, UAE, and Qatar and all these geographies will be 50 to 60% easily. And Saudi, as I'm hoping to grow, it can be a little more. Domestic
Okay,
business will shrink, but Saudi, Middle East, and regional business will grow. And also Australia, sorry, also US and Europe business will grow as well, because we see a lot of opportunities in the backlog in both type of the world.
Okay, so there seems to be still confusion remaining in international investors. So a lot of questions in the Q&A box I can see from international investors with regards to the margins outlook, especially the EBITDA margin. So how do you see those margins going forward? And again, if you can also comment region-wise with regards to the revenue outlook. And you have already discussed about these things, but again, there seems to be confusion.
Yeah, I think EBITDA margin is definitely going to be, as I have shared and as we have written in our director report as well, we had 2 Eid holidays of 2 weeks off in this quarter, right? And the first quarter has a lot of holidays as well, and shortened number of days in the quarter. We are, of course, services company. We bill by number of days and hours, and we work accordingly. And if the clients are closed, we can't just bill those hours accordingly, right? So we had a significant 2 weeks, almost, I would say, 2 weeks off, which is a huge in one quarter. and it never happened like two set Eids in one quarter. It is after a long time it happened. So definitely first half has been depressed because of that. But in these 2 quarters, we don't have any planned holidays as per se from regional perspective and as well as from Pakistan perspective. So that is going to definitely improve. And I think we have written already that if our revenue increases by I think X percentage and our cost remains the same, you guys can do the math, right? It's only going to add up the bottom line, right? So if there is a seasonality impact, definitely we have seen it. And EBITDA margins are definitely going to be improved. And as I said, Pakistan is slowly and gradually going towards negative to positive. May not see everything corrected in quarter 3, but quarter 4 definitely Pakistan business is going to take a corrective course of action. And other businesses are also we're very because the growth as we are increasing the top line, we're not increasing all the other overheads as well as directly proportional. All other overheads are almost the same. Only the salary cost is going up. So automatically there is a path to the profitability and improved EBITDA margin. So we were able to achieve the growth momentum. Now we are very confident in H2. We will have a margin impact as well, significant one, not the small one.
Okay, perfect. So can you please provide some guidance on 10.4 billion, I guess, contract assets as to why, what are they exactly booked for, and what is the primary reasons behind declining gross margins within the BFSI vertical, despite strong talent retention?
Yeah, from BFSI, we had few legacy projects, as I said, in Pakistan, which we were finishing up, and the most of the projects, except one, maybe all will end up in the quarter 3. There will be one or two, one carryover in the quarter 4 and one carryover probably in quarter first of 2025, but most of them will be done. So that was a drag on the legacy projects was finished. Few of them are finished, one or two are remaining, which will be finished this year. So in this quarter, in the next quarter, so there is definitely taking a drag on the profitability. So with the new signing, we have done a lot of new signings, and the backlog has been great. So I'm very confident that BFSI also is going to be a much better number than what we have seen in the first half, because we have won a lot of projects, number one. Number two, we have finished up the old projects. So almost all of the projects are new now, except one or two, which I mentioned. So that's the PFS's. And the second, you asked about the contract asset, right?
Yeah,
Contract assets are asset of 10 billion, you said, right?
yeah,
Just
that's the number was in Q&A. Yeah,
uh,
10.4.
Rui, can you confirm, right?
Yeah,
What is it?
contract assets are, so when we are delivering services to our customers, we book that revenue. The difference between contract assets and the accounts receivable that we see in the financial statements is one is revenue but not invoiced to the customer yet, and then we invoice the customer based on our milestones for fixed assets. And so mostly it's the fixed price contracts that is reflected in the contract assets, because they are billed on or invoiced to the customers on milestone basis. So once they are invoiced to the customer, it moves to the AR.
Actually, it's 1.5 months if you look at it, $30 million roughly, give and take, right? So it's a 1.5 month of revenue. So when we do the DSO calculation, we combine both the contract asset plus our AR, and our target is to do less than 120 days, both of them, which is the industry standard. So since our revenue has grown significantly as well, so contract asset will be always 1 to 2 months lag. That's what always happened. And it's 1.5 months right now. Maybe we can improve a little bit, but not much.
Okay, perfect. So, sir, what's your outlook on the exchange rate for next 12 months, number one? And number two, also please explain about the seasonality factor that you have just mentioned a short while ago. What sort of seasonality systems is exposed to?
Yeah, I think dollar, I wish I can predict in Pakistan. So all the predictions has failed so far. So whatever we planned last year for the budget, when the dollar was 288, we were planning for the budget, and we couldn't expect in Pakistan to have a reverse 10 rupees appreciation. That's so all bets are off, but I think you guys are the better judge. There are so many analysts in the call. Usually with the inflation and all of these things and interest rate and 15 months of stopped something and with IMF happening, everybody says to me, I can't predict, but most of the people says it should touch 295 to 300 by end of this year. But again, I can't predict. So, and IMF has also shared their forecast for 325 for the June. So if we take IMF literally, then 325 is a number. But if we don't take IMF literally, then any guess is my guess is your guess. So it doesn't matter, right? So, but as I said, now we have stopped chasing this, right? I've given up on this. We need to have a fundamental correction, fundamental efficiency, fundamental on whatever the rates we are getting. We have frozen our rates on that, and we have planned our business activity on that. So because we know that if we are profitable and improved our EBITDA margin and our margins on this dollar rate, of course, our revenue is every month $1 rupee depreciation will help us a lot, right? Help us a lot. But I think not in our end, so we are not planned. So we stopped planning that. We just constant now, constant currency, constant business. So we are very clear on that, right? So that will definitely, that is definitely helping us because now we are looking at other avenues to optimizing the cost as well. Because when you forecast, like we used to forecast, like, okay, next quarter it will be 10 rupees up, 5 rupees up, and 30 rupees up, then you can keep spending from that direction as well. So we have stopped that, right? So that is the positive sign, and that it will improve us fundamentally. And what was your second question? That was your currency
Yeah,
one, and what? Okay, sorry.
seasonality. So yeah,
Seasonality, I think only seasonality what we get is Eid holidays, right? Largely, because we operate in now GCC countries. So two Eid holidays are the most ones where at least sometimes 4 days, sometimes 5 days, sometimes 3 days. But so this year it was longer than expected, and it's both in one quarter. So this seasonality will come next year as well. I don't know that Eid is going to fall on March and the June, it's like first and second quarter, but it will be closer, right? So this is the only major seasonality. Rest 1 or 2 days off here and there, public holidays here and there, that doesn't affect much. But when you talk about a week in a stretch or 4 days in a stretch, it's a lot of revenue loss. A lot of revenue loss. You can do the math on a quarterly revenue, divide by 3 months and divide by 2 weeks, you will get a number, right? So it's a huge impact, right? Which we can't sustain in a quarter, of course. So quarter 3, we don't see any major holidays coming. Quarter 4, yes, Christmas 1 day off, and in US Thanksgiving 1 day off, but it's not again major. So it's one day here and there. So usually quarter 3 and quarter 4, we are not seeing much, at least the planned way. Unplanned, if anything happens, I can't say anything, but nothing is so far globally, because now we are not focusing on Pakistan calendar, to be honest with you. We are focusing on we are 90% of business are international business, right? So our teams are working on international calendar. So we are not working on Pakistan. 90% of the people are working on international calendar. Only 10% of the domestic people are working on Pakistan calendar. So largely it's a diversified. Europe follows Europe, America follows American calendar team, and so forth. But since the large portion of the business is Middle East, so these things happen and affect there.
perfect. So in terms of migrating top clients from lower bucket to top two buckets, so there has not been any significant progress. So should we expect that to change in next year?
Yes, I think significant. I think there is definitely a progress. First, the tiers are going to be changed as well. I think you will see the top tier will be not 10 million, it will be higher for sure.
Okay,
And
great.
similarly, other clients and significant higher, I would say. So we are expecting significant jump from the top tier to other tiers as well. So we are really focusing on, and I'm glad to report that we have seen that kind of a scale as well from top customers as well, right? So
Great. It's good to hear, sir. So
yeah,
for
percentage calculation, it's very easy. Rui has shared the top one customer percentage, and you can do the
Yeah.
math. It is easy to do the math, right? So
Perfect. So for how many clients you have implemented Microsoft Dynamics and CRM in Pakistan?
Pakistan, we are not focusing, to be honest. Now we have stopped working in Pakistan for any of this type of, like, very rarely we sign up. It is a strategic customer. We have stopped doing the mid-size, small to mid-size implementations. We are only focusing on the banks and the telcos, and they don't use the Microsoft Dynamics at all. Uh, so we are not, as I said, we have changed the stance and the positioning in Pakistan market to be profitable business instead of continuously giving that argument that's a training ground and there is a we need to learn. Yes, that is the byproduct, but not at the cost of profits anymore. Because now we are bigger and we can dictate our terms and condition and our rate. And if customer is not willing to pay our rate, we will not work with. We will not do that, right? Unless and until it's a key strategic. I never say no to no. So if there is a strategic and benefit and so on and so forth, we go for it. Otherwise, we are not going. We have completely stopped all the small business, and all the tail end customers will be either they will pay us at the market rate, or we will not continue with that. So that's a very clear strategy for us to be focused on the larger accounts. We have done the similar thing in Middle East as well, and that has paid off. Now we are only working, all of these customers are enterprise customers. We don't need like hundreds customers. We need good customers, the best customers where we can penetrate. And as you rightly said, that how can we improve the tiers, right? If they should have a potential to, they should have a potential to improve from one tier to other. So it's not like we just remain in that tier. That is not acceptable anymore.
Great. So we are just left with 10 more minutes. So we still have a couple of questions in the Q&A box. So I would like to just remind all the audience that the session will stop at sharp 6 p.m. basically. Yeah.
And
So the
we
next,
will be, I think, if just a session can stop, but I think we are always available through top line
exactly.
or through our investor relationship. If you guys have any additional questions, we'll be happy to answer. We are very transparent and always being transparent, and we will be happy to answer any questions from anyone, right? So that's not an issue at all. Yeah, we can stop this session, but we can definitely answer later.
Like Asif sir said, so if you guys have any question, which has remained unanswered in this session, maybe you guys can email us. You can also email directly to the management of systems. So definitely you guys will get the response. So the next question is company aiming to go for more SaaS-based products like NDC Tech?
SaaS-based product. I think we are not mixing products and services together. We are definitely building accelerator solutions and solving the customer real problem and going with the value-added services. But systems is not doing SaaS-based business right now. NDC Tech was also not SaaS-based business, just a services business, and and we are building accelerator on these Temenos and other stuff, SAP, Microsoft, all of these in technologies, in banking, in telco. So these things we will continue to do because these are our door openers. And without having those solutions, we will not be able to get the foot in the door because we need to constantly differentiate ourselves with the competition. And we'll continue to do that for sure. But we're not mixing up these two things. If we need to do products, we will build a new company and we'll build under it and we will invest. We'll have a proper CEO, proper structure. And this is how we will build a SaaS-based business or product-based business. We will not combine these two. Otherwise, it will be in services and product. In product, you need patience. In services, you need to be restless. So both doesn't go hand in hand.
Yes, sir, please tell the impact of higher taxation on salaries. So is the company forced to increase salaries to compensate for the higher taxation in Pakistan?
I think I will answer both. Like corporate taxation is also this year you have seen it's increased because UAE was not taxed before and now it is. Saudi has been taxed as well, and there is a withholding tax. So you can see our taxes increase. But Pakistan exports, as we are growing export business and doing less business in domestic, our tax will be optimized because its export is just 0.25%. So for Pakistan, employee taxation, I think we can't do much. That's not in our hand, right? That's a government problem. What we are doing is, of course, we are helping our people to optimize their tax through other tools like VPS and others, so they can get benefits. So we are educating them to make sure that they get some benefit from tax and so on and so forth, whatever the available framework, whatever is the available within the framework of taxation. We are helping and building the models and the rules to help our employees. But beyond that, we are very transparent and a company. We just follow the country's guideline and just give what we have, right? So, and it's since it is not in our hand, we can't change much, right? From the government perspective, salary class is our salary class, whether it's IT or non-IT, doesn't matter. We all are in the same bucket, right?
Yes, sir. So now that you have a strong cash balance, especially in your offshore subsidiaries, do you have any targets lined up for mergers and acquisitions? What is your
Definitely.
view on inorganic growth to your business? Yes.
Definitely. I think now with the two things, right? Number one, of course, we have the cash as well, and we are number two is with the new regulations from the state bank, we can retain 50% of our export proceeds, and also we can use that 50% to send it to our subsidiaries without central bank approval. So that is a huge thing, and that will earlier we couldn't do M&A activities aggressively because we didn't have the money in the kitty, right? We had to first borrow the money or do some equity or something. So now we have that vehicle where we can send the money. 50% is very big number. Also now we have the vehicle where we can take a debt from uh, any foreign institutions, the private equity or investor, and take it into systems and issue something against equity or debt. And then we can take the entire amount back to our subsidiaries as well. Entire 100% is allowed now. So this has opened a new avenue for us for M&A. We have devised an M&A strategy, the criteria, the market, and the whole team is focusing now. We're building the pipeline for the business. Now we are building the pipeline for M&A as well. So it's a great sign that at least we have the path to follow. We might be able to get it tomorrow. We might be able to get it like after 6 months or a year. Nobody knows, but we don't want to get into a worse deal. We want to take risk for sure in a growth mindset, but take a calculated risk because we definitely want to do this inorganic growth to maintain that kind of a growth momentum. 40% growth rate is not usual in our industry at this number. So to maintain the growth momentum, definitely organic plus inorganic is needed. And we have started after this law, and we have built the team for this, and we will hire professionals if required as well in the markets where we are looking for these buyers and sellers where they do their buy side and sell side and give us the opportunities so we can look at it very focusedly and meticulously and find opportunities, right? And evaluate it thoroughly.
Great. So, one last question. I think this has quite significant importance. So, since we have seen there was increase in taxation on the exporters, goods exporters in the previous budget. So, do you see such taxation measures may be introduced for IT companies as well going forward?
They can't. It's first of all, it will be very. This is the only sector that is the hope, one of the only sector I would say, hope of the country, where we have a lot of unemployment issues in the country, where this sector generates a lot of employment for the country and a lot of exports and net exporters, right? We are not like a goods exporter because they import 70% and then export value addition is 30%. Here it is 95%, right? So it's a huge tax from that perspective. Government is taking the benefit from that perspective, from that differential already, right? So I don't see that happening. If that happens, because services companies are very easy to, they can't, it's services company, you can, all the contracts are with your subsidiaries, right? Agreed. So subsidiaries do the contracts, and then everybody will switch to the cost model, right? And if you just switch to the cost model, the profit will be zero. They will even don't get 0.25%. So it would be the net loss for them, for the government versus net gain. So it's very easy in services business because there is no goods or no LCs and other stuff. So it's a counterproductive, counterintuitive to even think about it. So I don't see that's going to happen. There is no discussion, and there will be, and if it happens, as I said, like nobody is directly doing the business with Pakistan entity. Everybody has subsidiaries outside, right? So what will happen? Everybody can understand. So companies will be covered, government will be at loss, right? Which I don't think so anybody will. I'm part of many such committees as well, and I think they listen and they understand this as well. I don't see that happening in the near future. After 5, 10 years, if something happens, God knows.
Great. So I think this brings us to end of this session. But like Asif Saab said, so we can now stop this session. But again, if you guys have any question, then you guys can forward your questions to us or to the management of systems. So your questions will be definitely addressed. Sir, Asif Saab, any last minutes remarks from your side? But I would
No, I
also
think
like you to address, yeah, just one
it,
last question from the investor also. So how do you see the global recession, how that will also impact your business? So maybe in your last remarks, you
yeah.
can also address this
Global
question.
recession helps us a lot, right? Huge help, right? Because why? Because everybody look for from high cost supplier to the then they look for labor arbitrage as well. And Pakistan is the most cost effective IT outsourcing destination in the world. So we will be the major beneficiary of any recession that happens around the globe, and we'll go very aggressively, and we will convert a lot of contracts from others to us. So I think I see if this happens, it will be a huge opportunity for us. There's no doubt about that. I think a lot of you guys have asked about the margins. I think we never write these in the director report, but this time we have clearly written from these 2 quarters. As I said, we have changed our approach. We were hoping that every quarter that dollar will do this and do this and do this. We have stopped that kind of a planning critically. We have just said it will be 278 and 278 for the rest of the year. Forget about whatever everybody says. So let's plan on 278. It cannot go to 250. Of course, that we can't imagine. This country can do this, but we have stand still our dollar and planned all our costs accordingly, planned all our investments accordingly, and really focused and zoomed down on our profits, bench efficiency. So it is not a crystal ball that it will like turn around as you asked 30% on a day one. It doesn't happen like this, but definitely there is a upside, and there is a definitely lot of upside because we have achieved a good growth, and now we have a seat on the table, right? I think once you grow, you have a seat on the table. That's what we were trying to achieve. You can't have a seat on the table if you remain a smaller company when scale makes you bigger and better. And that scale has given us a lot of opportunities to sit on the table with the large contracts, large companies. We're getting a lot of traction from principal. So I think we are very optimistic and bullish about our future together in all the geographies, wherever we are. Team is really motivated and really committed to do that. We can't go further on the dollar. We can't go further on inflation. We can't go further on the interest rate. So we have assumed all the negatives in the macro and planned accordingly. So that's the key to which we were not doing it. Now I'm very confident whatever happened to dollar, I don't care.
Great. So thank you so much, Asif Saab, and thanks to all the participants for joining us in this investor briefing session of Systems Limited. We'll see you soon in the next session. Thanks a lot. Thank you, everyone, for joining us.
Thank you. Thank you, everyone. Thank you.
Thank
Appreciate it.
you.
Appreciate your time. Thank you.